Good evening, everybody. Welcome back to another weekly market review for F45 trading. This week we're discussing June the 7th to Friday, June the 11th, 2021. So we did have non-farm payroll last week, and we did see a bit of a surge in the markets. But overall, the trend of the week wasn't really affected. For the dollar, it was still an up week. And for EurUsd, GbpUsd, and Aussie, it was a down week. And obviously, USCad, we're still stuck in the range here. So this week, we've got some numbers coming out for the Bank of Canada interest rate statement on the on Wednesday, I should say. And they're not anticipating a change. Still a quarter basis point interest rate. And then we've got a bunch of EurUsd high impact news events, monetary policy statements, and again, so the euro is at a 0% interest rate. They can't go any lower. I mean, they could. They get it at negative interest rates, but they're holding fast so far. And at the end of the day, I mean, I think they're going to have to start seeing some significant inflation in order to start raising these numbers here. I don't know if European markets are seeing that yet, so I'll do a little more research in on that one, find out what we're looking at. But U.S. dollar, and then we've got the closing off the week with core CPI and unemployment claims again for the week on Thursday. Now we're pretty void of news on Monday and Tuesday. This will change. So just make sure that you're updating each week your Forex factory and just making sure you've got an idea as to what's happening, because they like to throw last minute news in here as it comes out for the day. So this will probably change. High impact stuff though going into the middle part of the week for Canadian dollar, and then euro and USD later in the week. So looking at the markets, we did have a big surge last week, and as I said many times before, it's kind of one of those months where over the past couple of months, 2 months, has been just sideways price action, and there's not a whole lot of momentum one way or the other. Now, I guess technically May did see the start to the start of the month had a bit of a downward momentum, minus a couple of days in here, but since the middle of May we've just been going straight sideways. So both the past 3 weeks or so, just banking up and down, not really making any real movement one way or another, and we're still technically stuck in there. We had a nice surge out last Thursday, only to give it all back on Friday, and now we're right back at the higher end of this range in here. So what I'm watching is this level right here on the US dollar. If you can see, let me take the data divider off here, see that a little bit more clear. You can see how basically this level right here, the 89, well, we'll call it 90 even, just to kind of make things a little easier. That's the level I'm looking at. I personally think that we could come down and touch off that level again. I think if we trade through that level, then we're probably going to go lower, at least to run these lows under here. If you look at this, they haven't had a stop run under here until we reached this level here. Whether we get down below this guy here or not is another question. We're going to have to wait until we run this out to see how the day closes, to see if we want to get down to here. But if you look at this 90 level, I'll bring back to that. Price came in, hammered it there. Daily close there. Almost had the daily open there, gap down a little bit. And here we had a daily close here, and just about right there as well too. And then we had Friday touch right off that level and reject. So that 90 level I think is fairly significant. Now going forward, as I say, if we run out the low here, that 90 level, then I think we're probably going to attack these 2 days daily lows here. So watch for that. But I'm not necessarily overly convinced that this thing is going to go higher or lower. Right now we're just chopping sideways. So until we break out of this range, you got to be very, very, have some short-term goals on your trading plans. Going down to the hourly, for instance, short-term trading goals. would be, you know, this here and that there, that being your target. If price drops lower, that would be my only target. I wouldn't necessarily target over here, and I probably certainly wouldn't target over here until we got down to those levels more, made it a little more convincing. We could just as easily be using these highs in here for support. We're trading down into it right now, and price could jam higher and close back in this whole range and possibly run for those highs. So right now, you know, again, look at the indecision and the price coiling in this 90 level right here. So I think we're not out of the woods yet. And again, we're starting to come into the summer months. I've been mentioning this for a while now, where trading kind of goes a little bit sideways. Now, I think you're going to probably get a lot of people really moving to the sidelines this summer as well too. If you think about what's happened, you know, last year we had the market fall out in March, a huge rally ensuing. I don't really think I saw prices really slowing down, markets slowing down all through last summer, because everybody was at home, right? Nobody was at the office working. Everyone was at home, and everybody's in the markets moving money around. So we didn't really see a calming of the markets until about August. And then we were going into the election, which kind of was banking things sideways as well too. So that's a different matter. But this year now everybody's been stuck at home, and now, you know, throughout the winter, and now that everything is pretty much opened up across the world again, or close to, I think what you're going to see is a lot more traveling happening, you know, a lot more people taking, you know, obviously going back into the office, of course, but also, you know, looking to actually enjoy summer holidays a little bit more, and which will mean they'll probably be moving the money out of the markets. You know, that old adage, sell in May and go away. And so what I'm looking to see is probably a fairly muted summer. And now that doesn't mean we can't have a trending summer. That's absolutely, it happens all the time. I don't necessarily think it's going to be the entire summer, but it'd be great if it was. What I am saying, though, is I think the markets are starting to calm down a little bit for a couple of months, and you probably want to tackle it again in September when they start really hitting up. Now, we've got a couple of things obviously going on between now and September, a couple of commodity ideas that I've given out to my members, so we're going to be watching for those to see if they pan out here in the next couple of weeks. And as well too with Forex, I mean, don't get me wrong, you know, we can still grab a trade here or there. I mean, there's always still that possibility. So, but right now, as I mentioned, we're just back and forth right now. So it's a little bit tough to do anything until we can make a decision on what this thing wants to do one way or another. What it could be waiting for, which we don't see on here yet, is an interest rate decision, which I'd have to look. I won't go through it on here with you now. But in the next couple of weeks, we'll probably have another interest rate decision for the US dollar, and then I would imagine that's probably when they're going to start to, you know, pick a side of this market and get it there. So we'll have to wait and see. We've got USCAD coming out with theirs and Euro coming out with theirs this week, so you probably don't want to be trading USCAD, you know, until after Wednesday. And EurUsd, I definitely wouldn't be trading it on Thursday. You know, maybe trade it ahead of time if you want. We could probably see some consolidation on EurUsd. I'll go over that now. You can see the big drop off on Thursday. Friday came back up, and now we're just sitting here at this 2165 level. It's just waiting. Now, 2165, I was actually, incidentally, I did a live New York Open non-farm market analysis, and that was my target on the day on Friday, and we obviously hit that nicely, and then some actually. But I don't know where it's going to go from here. We could roll back over, fill this range back in, only to go straight back up, or we could just keep running higher from here. To be honest with you guys, it's I probably won't know a lot more until, I will know a lot more probably by Tuesday as to what we're going to do. But this to me, just outside of everything, this to me does look heavy. You know, we had a big price swing. Momentum drive higher in here, hit a top, came back down, swept the lows, and it had an opportunity after it swept these lows here to run higher and run out these highs here, and it failed to do so. And then we sold off and went shallow, and now we're just kind of right back up into here. This honestly to me looks like a run lower, a retest higher into an area of resistance, and then price is probably going to fall off. That's what I personally think is going to happen. I don't know if we're going to get that or not. So again, if you are trading for EurUsd, I might wait until after this week just because of the interest rate decision. We could just see this price just going sideways for the next little while until we see that on Thursday. So that would be my opinion for that. And then GbpUsd, I mean, look at this. I mean, if you guys want to come out and try to pick a direction on this and stick to it and say, yeah, I'm going to marry this, and this is the hill that I'm going to die on, and this thing's going to go higher or this thing's going to go lower, congratulations, you're a braver man than I am, or woman, because I have no idea where it's going to go. I mean, we had a nice up run here, as similar to the EurUsd. A couple equal lows down here, a couple equal highs over here. We actually just did, if you look at this guy here, just did, and I should change that to right there. You can see that price did just popped above that. This thing could go higher, it could go lower, and I think with the US dollar, obviously, if that thing finally makes a decision, then we'll see the momentum build on this, and we'll finally see it push in the correct direction, the opposite direction of the US dollar. But until it does it, there's nothing there, guys. There's absolutely nothing there. Aussie, you look at Aussie, and this to me, price was consolidating here. We dropped, swept the low, consolidated some more, and then popped higher. And then we should have seen the market continue to trend higher, and it just went absolutely nowhere. And then last Thursday, we dropped lower, right back into this consolidation range, sweeping all these lows, only to go right back up into the range on Friday. And now we're just kind of sitting here. We have these equal highs here. On Aussie particularly, because we had this big stop run, I'm actually interested to see if we can run these highs out. I wouldn't be surprised to see this thing try to get back up to 7,800. We're about 7,735 now, so it's not a huge range, but might be something there to look at. If we drop down to an hourly, I think that if we can get above this high here and this high here, then I think they'll probably try to push it above there. Would be some manipulation, obviously, on their part of Aussie, especially if US dollar is going sideways, but that could be something to watch for. But just bear in mind, again, just look at this consolidation. We dropped and cleared those lows. We could just rally back up here, only just to drop lower again, and extend this time frame. Or extend that trend line out, excuse me. We could just bank up into there and then roll over again. Not that I believe that these trend lines do anything, but it could certainly happen. So, there's lots of areas lower here, of course, a couple equal lows there. I mean, Aussie could do literally anything, and I do like that short term, like in the next couple of days. Long term, I don't know. UsCad. It's similar on UsCad. So we had price drop down once, twice, consolidate, 3 times we dropped, and then rejected in here, and a big rejection on Thursday. Friday returned back down, and now at the time of this recording, Sunday, it's opening up a little bit stronger now. They've got these highs up here. I like these highs. They haven't done a stop run above those highs, so I think that we're going to see the 2140 to 2150 level. I got 2147. I just threw that in there, but I can put 2150 just to make it nice even number. That has got my interest on UsCad. But again, what do we have on Wednesday? UsCad, Bank of Canada rate statement. So I'm not touching Canadian dollar until after Wednesday, excuse me. Moving on from Forex into crude oil, we've got a very, very sloppy, this is the weekly chart up here, a very, very sloppy but momentum building higher, bullish trend upwards. Last week had a nice big punch up, ran this old high out here from earlier in the year. You can see that week of March, early March, got ran out here last week. And now we're just, looks like we're probably going to come back down and maybe retest these old highs in here. Watch this high there. Whoops. So 67, what is the exact high here? It comes in at 67.96. So watch that level there. That could be an interest an area of interest for price to return back down to. Do we go lower than that? I think we're probably going to offer some support there. I just read a report. Again, everything is a grain of salt, geopolitical wise, because anything could happen. But the report was a pretty high up Russian. Now, again, take this all with a grain of salt, but it was a Russian minister, and he was basically saying that it's silly to think that the ramp up in renewable resources currently is going to overtake the current energy uses of fossil fuels. And, maybe in 10 years of significant investment in those markets, if the technology changes, it could do it. 100% no debate for me on that. I think one day fossil fuels will definitely be replaced. But the problem you've got is all of these environmentalists, investment funds, governments, lobbyists. I mean, all of these people are telling everybody, oh, don't invest in fossil fuels and don't put your money in there and we're going to ban this and boycott that and blah, blah, blah. Well, that's fine. Okay, that's fine. Do that, which means it's probably going to constrain the amount of investment going into oil and gas production and, limit the amount of new production, new wells drilled, new pipelines put in and new, resources getting to the market. That's fine. Do that. But don't think for 1 second that if that happens, when that happens, that the prices for crude oil and gasoline aren't going to skyrocket. And I mean, I don't even have it on this chart. Oh, maybe I do. Look at this. Okay, so this here, 147 could be a bump in the road. I mean, honestly, and if you think about this, the oil and gas industry requires billions of dollars every single year of new investment money to go in to continue to drill and explore for new resources and new, new oil and gas pools to supply the world economy. And if that investment isn't there, the research and the exploration isn't done. And you drill a well, you're eventually going to utilize all of the resources in that well, and you have to look for new pools of liquidity to go to. And if you don't put the money in there to do that, it's not going to be there. It's not going to get done, which means there's going to be a massive shortage, and the energy prices are going to go bananas. And I'll give you a perfect example. You look at the U.S. and go ahead and this is a very, very small scale intervention where that pipeline was hijacked for $5 million, which is a ridiculous sum. But the resulting gas prices just from that skyrocketed, like 3 times as much. Like I saw somebody was filling up in the U.S. for almost $5 a gallon. I mean, that's crazy. It's absolutely crazy. And, in a world that abundantly produces gasoline, there's absolutely no reason for that. And that was like a 1 week delay on that. And they're seeing that. So just imagine if that pipeline didn't have enough product to ship through it, what the prices would look like. It absolutely, $5 a gallon would be nothing. And people probably wish they'd be paying $5 a gallon. I could see $50 a gallon. Quite honestly. So anyway, that's down the road. We're definitely going to have to wait and see what happens. But that was that was the report that I was just reading today. And it definitely gives you a little bit of food for thought to weigh out. Something to keep in mind. Anyway, gold. Look at gold here. We had a big deep sell-off Thursday on gold. This to me on gold looks heavy. If you look at this, and I'll give you an example. So you look how price rallied, dropped off. We returned, went up to here, failed to go higher, drop, and then right here came in, failed to go higher than here, and then hammered lower. Very similar to what we've got here. Price ran up, came down, dropped down, came back up, failed to get higher, failure swing, and a possible return lower. If we can't get back through this area right here on gold, so watch gold. I think gold is going to be the leading indicator as to tell us what US dollar is going to do. Watch this area on gold. If we break through that, all my money's going on 1933. Let me rephrase that. I didn't. This is hypothetically speaking. Not. This is not trade advice. I am not a licensed analyst. These are my opinion only. And when I say all my money, all of my demo trading money would be bet on, hypothetically speaking, 1933. If we trade through there, I think we'll trade up into that range. But this to me looks pretty heavy on Thursday. Friday attempted to get up, hit that resistance area, and I think we're probably going to fall over. And I think there's a very good chance that 1845 could get run out. So I think if that gets hit, then US dollar, I believe, easily could get back above this high and maybe even try to stretch above there. Excuse me, above here is kind of what I'm looking at. So I'd like to kind of rely on gold a little bit more than normal. Only because the dollar is consolidating, and we do have a trending market on gold, and we really failed to make a high there. So watch this level here, and I'll just mark this on the chart. So price has got to trade through the 1900 level. I think if it's going to remain going higher, we got to get through that 1900 and really trade aggressively through it, and then I believe that this will be the next stop, and maybe even up here. And then, like I say, I think we're probably going to see higher prices on gold. But if we can't, watch this 1900 level. If we cannot get through that, I think this is going to be the target, that 1845 level. Okay. Sorry for taking a little bit longer today. Just had, not a whole lot we can do with Forex right now. So cool your jets. There's definitely other markets to trade. Crude oil, gold, silver. All right, silver, same thing right now. We had a big stop run down here, rallied up, so far failing to go higher. So we'll see where this ends up. If we take out the low here on Friday, I think we're probably going to continue to roll lower. And that's it. That's all. I appreciate you watching. Again, if this helped you at all, please hit the like button. Subscribe to my YouTube channel. Would really appreciate that. If you want more information on our membership services, just email me. F45trading@gmail.com. I'd be happy to answer anything you got. And to all my members, I will see you in the chat room tomorrow. Thanks for watching, guys, and good luck this week.